Hello and welcome to Ledgercast. My name is Brian Krogsgaard, here with my arch enemy for this next week, Josh Olszewicz. Hello, Mr. Phillies fan.
I didn't take you for much of a baseball fan, but
Oh, dude, I grew up with the 90s Braves. I mean, how could you not love the Braves in the 90s?
it's true. Glavine, Schmaltz, Maddox.
That's right. Lopez, Lemke, Blauser, David Justice, Fred McGriff, Chipper Jones.
Chipper Jones. That's a name I haven't heard in a long time.
Yeah. I'll be at game 1 of the divisional series on tomorrow, Saturday, for our listeners who are catching up later. You'll know if I enjoyed it or not based on the outcome if you're listening on Sunday.
Or if you're in another planet, you know that it's Saturday. We're going to have to specify that eventually,
It's true.
We're going to have to say this is Earth Saturday. In these space shows, to just, completely derail this entirely, they always say, like, they give a time point, and I'm like, is that an Earth Day? Is that like what relative to what, right? You have to like specify, like 24 hours.
I do give a lot of leniency to fantasy stories based on other planets where they talk about length of days, and it's like, I mean, does the planet rotate?
It does, but I mean, yeah, it's like they never really specify. It just sort of like implied, like it's a day is 24 hours because that's an Earth Day. But
right.
Anyway.
Well, for anybody that has no idea what we're talking about, the Braves, the best team in baseball, are playing the Phillies, who just finally clinched it like yesterday to play in the divisional series, which starts tomorrow, Saturday. And Josh lives in Philly, and I live in the South, which is the Braves circumference of fandom. The South. They're like the team of the South, basically.
Yeah.
Anyway, and I'd bet a mistake about the series, but I don't want to owe him 2 steaks for 2 more years.
You can owe me a whole cow pretty soon.
I just like carrying this debt. Based on the interest, I'm gonna owe you like a 45-ounce steak.
I mean, yeah, it's gonna be like
giant ribeyes with
mashed potatoes and steamed
the whole thing,
creamed spinach or whatever.
Josh, we had a good little conversation going in one of our chats today about, is the world falling apart, or is this establishing potential trend reversal, sentiment, and assets? The S&P is not really a great asset to look at, though, is it? In terms of what the carnage has been. Like, if you really want to see where carnage shows up, it's got to be like rates in the Dixie, right? More than just the S&P. It looks like a little correction on the S&P. But there's definitely a lot of doomerish talk out there, wouldn't you say?
Oh, yeah. I mean, the energy doomers were out in force the week before, and look what happened to oil. You've got, what do we got now? We got like consumer staples doomers because of the consumer spending numbers that came through. Excuse me. And we're seeing that all over the charts. Not necessarily, you're not going to see that on the S&P, but I'm trying to think, like, what chart can I even pull up here? IWM, maybe? There's some consumer staple ETF. I can't remember what it is, but I was looking at McDonald's. It's like, this is this is the chart that like is happening.
The golden arches.
But these charts are just like happening, and everyone's like, yeah, it's a bull market. It's a bull market. I don't think everybody's saying it's a bull market, but if you look at the S&P and the Qs or whatever else.
Yeah, there's an equal weighted S&P ETF.
Yeah. I was just trying to find the consumer. Is it XLP? The point is, some
RSP.
Some of these charts just look terrible, like
so
mega.
That's the equal weighted ETF right there. If the chat can see that.
Mega yearly lows. There's some banks that are melting down that nobody's talking about that are small, but it's kind of emblematic of the whole market. There's like pockets of really bad charts right now, and it doesn't feel like we can have a crypto bull market with stuff like that going on. But if this is institutional led, as in like ETF led, then maybe it doesn't matter. I don't know.
There's two things that are still in good shape. One is the like top 8 stocks or whatever, and then two is basically employment. Um, the jobs report that came out today, even this might hint at this bottom. The jobs report was very positive, meaning po- lots of jobs is bad now. So you put that in your head first. Too much employment, which
Well,
indicates potential
good
for
news.
further inflation, but that actually created a bit of a bottom on this turn that the market flipped pretty quick on that. But yeah, unemployment is still very low.
The first thing you need to ask yourself is, what does the jobs number mean? Is it good news or bad news? And then you need to ask yourself, is good news bad news, or is bad news good news? Are we in that paradigm currently?
We have been, except for it turned today.
I don't know. Honestly, you could argue either way, right? I saw the revisions for last month jobs was revised higher, I thought, for the first time in a long time. I think that's correct, which the doomers aren't probably not going to talk about because it's been like 8 consecutive revisions down. I don't know. The data is all over the place, honestly, for me. I think if you're paying attention to the macro, you get like analysis paralysis because TLT is melting down, yields are rising, housing's melting down, but yet here we are. Bitcoin's at almost 28K. So I don't know what to think,
Yeah, it looks okay. Bitcoin looks okay. It doesn't look great. I put a big yellow box on this chart for you. I knew you might need a big nice chart to see it.
Well, the question that I'm asking myself is how much of this stuff melting down is going to matter eventually? Like rates eventually hit a point where it's just like everything melts down, right?
Yeah, but if the dollar, if things turn around, if money gets a little easier, let's say,
But that's not happening anytime
it's
soon.
not happening right now. Whether it's happening soon, you don't know that.
Higher for longer, bro.
Higher for longer.
Look,
But what?
look at
Let's
the bond
say,
market. We have Rick Santelli on CNBC talking about 13% rates. Like, I don't think it's going to go that
but it
high.
only takes a few months of like, stuff's hitting the fan, so we need to get easy, and the market could start to price that in even before. I was listening to a Luke Gromen interview.
Oh man.
Yeah, yeah. One of those macro people. But his point was once that easing becomes known that it's going to happen, that it could be the economy might still be bad, and it might still have a highly inflationary economy, but at the same time, the stock market and hard assets start to do very well. And he included Bitcoin in his analysis.
As he would, because he's Luke Roman.
Yeah.
I like Luke, but what I don't like about these macro people are they bring out these charts that say, inflation is fine. The Fed needs to start easing now. They're going to be behind the curve.
They might be. They tend to act. They have tended to be quite late to the right move, right? They should have started raising earlier, and instead they had to do it incredibly steeply, which caused lots of problems.
They have been, but prices are still out of control, regardless of what CPI is telling you. Like everybody knows that. We see data points for that every day. Go to the grocery store. It may not be accelerating, but it's still.
I think demand is way less than what numbers say.
Demand for what?
Spending.
Well, we had the consumer spending numbers came out Monday, I think it was, And TLDR, it's down to the left. Sorry, not down to the right. And in a big way.
Like consumer discretionary.
Yeah. I don't even know where that chart was pulled from or what data point that was. But so there was this implied demand picture, I think, for people that, everything's going to be in trouble. Target, Walmart, we showed McDonald's, the consumer staples are all down. Not Rite Aid. What's another? Walgreens, I think.
Walgreens.
All Coca-Cola, like all these are just melting down, and you've got Walgreens blaming Ozempic for their their lack of spending. It's
I think that's actually really cool.
I think it's great. I think it shows you how much that they rely on
people being fat.
Exactly.
Like people relying on a culture of like
sickness.
Yeah.
Yeah.
But the Ozempic story is pretty cool. Like I feel like that is unsung, but maybe I'm just not paying attention to pharma stuff. But like that drug is making a difference, and seems to be really helping people. And I don't know. Seems like America should be excited about that.
Well, that's why it's funny that you have the retailers coming out and saying and blaming Ozempic versus like talking about. I mean, they talk about shrinkage a lot, but that's also a massive problem. So is consumer spending, right? It's not like
what is shrinkage in your context?
Shrinkage in retailers' context is theft, loss to people stealing things.
Gotcha.
Yeah. By the way, you didn't tell people you had the hat on to cover up your grays. That's really why.
Oh man, dude, and the ear hair. First ever. I've never in my life had one of those hairs just sticking out of your ear until this week. I'm an old.
He's an old now. But in all this, gold melted down, oil melted down, dollar's melting down.
Dollar's not melting down.
Okay, look.
You're staying on one chart, so I'm going to drive here for a second.
So yeah, I can't. I'm a pancake, not a waffle. I can't. Do
it's the first red weekly here, Josh, in 2+ months.
I'll take it. 12 weeks of up. It's about time. That's not normal,
Yeah.
I'm not just saying that because I'm on the other side of that trade. It's just like that's not normal activity from anything. You don't see that on any chart.
TD12 called it perfectly. Tone Base, where are you at?
Well, what I was saying on the daily cloud for DXY is that this is a massive TKC clamp, aka overbought conditions. 104 would be very possible here on the DXY, just based on technicals. So we'll see if that actually plays out.
Look at that. Wow. That was a weekly Keynesian slam.
Weekly edge to edge too on the DXY.
Yeah. Interesting. I clearly hadn't been looking at the cloud lately.
So look, on the Bitcoin side, we've held up. The ETFs for ETH has come and gone. It's been a nothing burger. But on the Bitcoin side, we held up.
Gosh, look at this. More cloud news.
We just got to keep talking. Yeah, so look, again, Bitcoin has done well. We've done oddly well. Some people saying we're decorrelating, decoupling, talking about store value. I don't think that's quite the case. I just think the people that were trading this.
Hold on.
Yeah, go ahead.
I haven't watched your videos in a while, but I'm assuming the edge to edge on Bitcoin's weekly is like top and front and center.
Top and tail.
Tail.
Yes. Been talking about it for the past couple of weeks.
You've been acting kind of bearish though. I thought you were a dirty bear right now.
Well, the problem for those who don't know, the cloud trade, the setup, these weekly moves through the cloud have only happened 2 or 3 times historically. Like you don't see this often, right? This is like a once a cycle setup.
This is basically a 2016 repeat. Is what you're hoping for.
Really what this is, it's a mean reversion to the 50% retracement of the all-time high to the local low. That's all this really is.
That's what the math behind it will show.
Correct. So once we get in the cloud, that's a really good sign that we have a chance to actually move to 42 in this case. The problem for me was that diagonal head and shoulders Legacy looked super bearish, right? Legacy broke down a lot since like the past 2 weeks, right?
Mm-hmm.
But we haven't broken 25. Sailor's buying, Tether's buying.
Sailor buying is not bullish.
I agree, but somebody's buying something, right? Like
Yeah.
we're all sitting here like, who's going to buy alts? Who's going to buy alts? Well, nobody, but somebody's buying BTC at the very least, and we get closer to the ETF every day, you know. So I am worried about recession. I'm worried about yield curve shenanigans. I'm worried about consumer spending. But if I'm just looking at the chart, it looks really
like
good.
42K.
I like 42, right? And back
I
to
like
analysis.
42. Send it to 42.
Back to analysis paralysis. Like if you're paying attention to every little data point every week, it's so hard to have, like, for me to have a true straight and narrow, like this is what I believe in as far as trading. Like all those data points are going to tell you squat about how to trade this market, you know? So that's why I like the technicals for Bitcoin. ETH, another story.
ETH doesn't look as good on the old cloud.
No. ETH doesn't do well the second half of the year. ETH does better the first half of the year. ETH does better post Bitcoin halving. You know, again, Bitcoin's halving is great for alts because that brings money to the top of the ecosystem and then it trickles down. So that just makes sense that's how this goes normally, you know? So everybody should be rooting for Bitcoin because if Bitcoin doesn't do well, the alts certainly won't do well. And that includes ETH.
Yeah. The best thing you can do is create some capital concentration and flow.
So you should be rooting for the Bitcoin maxis. You should be rooting for the store of value narrative, right? Everybody should.
I don't have to root for Bitcoin maxis to root for Bitcoin going up, just to make that clear.
Fine, whatever. But, you know.
I'll root for you.
All right. I'll root for me too.
I'll root for Nick Carter. I'll root for... I'll even root for Pomp.
Technicals look great. The data's
I'm not rooting for Pierre Rochard or Saifuddin. No.
I can't get behind ordinals or drive chains. That's just not for me. But
I'll root for Udi and Eric.
Whatever. It's, to me, it's all just a distraction and noise. So, you know, but that's Bitcoin, you know? It's for everybody, including people we can't stand. Yeah, but Bitcoin looks really good. Surprisingly, you know? And maybe that's because nobody's here and nobody cares about it.
But so here's some confluence if we want to switch our trend following strategies from clouds to moving averages. It says,
why would we want to do that?
Because it's beautiful. And it says, it gives a similar story of, you know, these fast recross type situations. You clear it from here and the upside looks pretty good. It's a trend flip that has historically been good. Now we spent a long time in the range of the long-term moving averages, but in a proper regain scenario, it harkens back to 2015, 2016.
People in the comments talking about last week versus this week versus 2 weeks ago. It is surprising, again, that we held up against gold melting down, dollar going to infinity, et cetera, et cetera, et cetera. Like that was not a base expectation, I don't think, for anybody. Like we're just gonna imagine, besides like, you know, the BTC maxis who are like, yeah, this is what happens. But so it's unusual that we've held up. It's a pleasant surprise to me, you know, because things did look pretty bearish last week, the week before, certainly.
Yeah, and still can. I mean, you don't need much time to turn that narrative around pretty dramatically. Like the rate situation is absolutely still a problem. But you could also look at this and say, okay, well, maybe the top just blew off of it. You know, maybe it's going to consolidate here for some time and there's trade opportunities there. But your long-term trend is definitely changed in a big way. Like steepness wise, there are historical recessions that didn't have near as steep of changes in long-term rates as what we've seen here. Or growth periods of recovery, or, you know, whichever way you want to look at it. Just the magnitude of the changes unbelievable, both down during COVID and then on the way up ever since, is magnificent. I mean, magnificent steepness.
Yeah, the rate of change is something. So the measured move for this is 5 to 5.25 as far as the target for yields based on, again, just looking at TA.
Mm-hmm. Do you want to show us some stuff on a chart or no?
I don't know if I have it. Do I? I mean, you can. It's just like, again, like the most basic. Take the high, take the low, project it upwards. We get, so we're almost there as far as the technical setup.
I don't think they have, like, there's not much further you go without just massively breaking things. What's happening now, for people curious, is they're probably pausing and not going to raise rates for quite some time.
Well, they don't need to. The bond market's doing it for them,
Right. So because the expectation is now that they're going to stay there, whereas the market was pricing in that they're going to go back down. So now you have the 30-year catching up with the 2-year, or the 10-year catching up with the 1-year, whatever you want to compare. The long dated stuff is equalizing. I believe they call it a bear steepener. Is that right?
That's correct.
To where, say the 30-year was at 4 and it's moving to 5, and the 2-year was at 5 and it's staying at 5. That move of the 30-year from 4 to 5 brings them closer to parity. And it's basically the bond market telling you that, well, these long-term yields have got to go up because rates are going to stay higher for longer. We're not going to price in a lower rate in the future. And the market was not predicting that. And that's what's causing people to freak out even more.
Yeah, people are definitely caught off sides there. Just as people are caught off sides on TLT because they keep longing, people keep buying the long bond and it just goes lower and lower and lower and lower. People think yields are going to hold, I guess. I don't know. Like, this does not look like a chart, again, that I would buy. What are people doing? It's down like, what, 65% from all-time high? I understand why people are doing it. It's just, I don't know.
So what are they betting on when they're buying here?
People are betting on yields reversing. People are betting on a bullish bond market.
Yeah. Not just stabilizing, but reversing.
Right. And look, I get it. It's a parabolic downside. People want to capture that yield on the long end, but they just keep throwing money at this and it doesn't matter. It just keeps going lower. The supply of bonds that we are bringing to the market are not helping. The lack of buyers in the global stage is not helping. And I don't know. I wish them luck, but so far it hasn't worked out,
So, yeah, you said lack of buyers on a global stage, people who want to own.
I'm talking about like foreign governments here.
Foreign governments that no longer want to own our treasuries. Right. So China dumping the bag over the last couple of years, right?
Well, they haven't necessarily dumped. Again, you got to remember,
they're just not buying.
Right. They're not buying. The charts you see of China's, bond holdings are not total holdings. It's like notional value or nominal value. So yes, of course they're down. Look at the long bond. Like the long bond's down 64% from all-time high. Anyway, Japan's not buying. China's not buying. Saudis aren't buying. Like, who's buying?
We're buying.
Tether.
We're buying them ourselves.
Well, that's the thing. The consumer,
retail's buying, right?
Exactly.
Aren't the boomers buying?
Oh, 100%. The inflows into TLT have been massive, but people have been wrong. Like, look at the volume on this. It's insane. And this is almost at an all-time low based on this ETF.
Can you scoot the whole thing to the left about 2 inches?
Sorry, I know our face is in the way, but
that's never a good chart when the faces are in the way.
When the volume touches the price, not a good sign. Yeah, and this looks like a shitcoin chart, and this is like the global collateral reserve. That's why it's hard for me to be fully on board with a bullish move in Bitcoin, but I'll take it. I'm not going to short it.
Theoretically, though, if you're close to retirement and you can lock in 5% right now, theoretically, that's a good idea, unless we hit some kind of hyperinflation. then all of a sudden it doesn't feel so good.
But why like 20-year right now? Why not? Like for me, I've got some stuff on the short end of the curve, like 0 to 3 month, right? Like don't marry a long-term bond right now. Yields haven't topped. Like this is people saying I'm calling the top,
Yeah.
on yields, which
Yeah,
is
you're
never
saying I want to lock this in for the tenure of this.
right.
Of
And then
course, when institutions do this, and this is why so many of them are wrecked, when they were locking in yields when they were 2%, now if they can hold to duration, that's fine, 2%, even though it's not a good yield. But should you have to trade out of it, you have to cover the losses of where the market is now versus where you have it in the market. And that's what creates the problem is you're going to lose a lot of money trying to trade out of something that you locked, like theoretically locked.
right. Well, people are assuming that based on the previous yield regime that this is a great yield right now, but they're
Right.
not understanding that maybe this is
Maybe
a
it's
new
not.
paradigm and yields are going to get higher and stay higher, and that's that, right? But like you're alluding
Versus if you just lock in like 90 days at a time and you're getting basically the same rate, that could be totally fine.
right.
But when you're locking in 90 days at a time, which is more of your Tether or USDC strategies,
Well, they do short-term treasuries.
that's what I'm saying.
Yeah, okay.
Yeah, but they're still getting 5%
Correct.
on an
Yeah.
annualized basis, but they get to roll them quarterly. But there's no guarantee that they get to carry that return in perpetuity because they're not locking in the longer term ones. That's the whole point of how this works.
Right. Well, it's duration risk versus reinvestment risk, right?
Right.
But we're all talking about the SVB problem, right? And this is why the BTFP program by the Fed was created, where they'll
And
take
can you
the
explain what that
bonds.
does?
Yeah. So if you're a bank who's underwater and you need to meet deposit demand, your options are either to sell at a massive loss, which is
Underwater meaning your stuff is locked away with duration issues.
right. You're down 65%, whatever it is, right? So your option is to sell a massive loss and basically go belly up, or go to the BTFP and the Fed will give you the par value or whatever it is, right? The value of the bond, the face value, and basically make you whole, and they'll take the loss. So even
It's a
still,
bailout of the banks not managing their duration risks well.
yes, that's true. But it's also true that the rate of change again has been the fastest ever, right?
Right. Now, but keep in mind, the duration risk is what killed a lot of these crypto companies.
Because of
Same thing, the same concept, but now
you're saying like
some
cost of
some of the
capital rising? Is that what you're alluding
some of
to?
the banks are getting bailed out of this duration risk. They're just as irresponsible, just with a different product. It's not like GBTC duration risk; it's Treasury duration risk. Some of them are getting nuked of their equity though. Like when the takeovers occur, the equity is going away, but the depositors, the people at the bank, are being made whole. They're the ones being kept whole.
I mean, look at this chart. This is a bank in Virginia, 3 billion AUM. I've heard very few people even talking about this thing. It's Blue Ridge Bank shares. Maybe we're just lighting a fire, throwing fuel on the fire here. That it's not that big of a deal, but I don't think regional banks are necessarily in a great spot. Obviously, here's another one. That's old data. Sorry, hold on. Metro. This is a UK bank, by the way. Down pretty significantly. Deposits are okay, but these banks, this higher for longer stuff is just bleeding them dry. They can't afford to keep the net interest margin high enough or whatever it is.
Yeah, if you look at
so Crypto Cabbage is asking about Tether duration in treasuries. They don't hold long-term treasuries. Neither does USDC.
So they can roll them every like 90 days. It's not a big deal. If they need to be all the way out, they can be 100% cash liquid in 90 days.
I don't know. Is SGov SGov might be one of them, but this chart is hilarious, by the way.
The one I'm showing you?
No, this SGov chart.
Sorry, I haven't pulled it up. I was just going to show as an example of this regional bank problem. Even if you take the mean of that, this is IAT, which is a U.S. regional banks ETF, and that's not good, right? Like that gap down was the banking crisis from all the SPV stuff. And so the market recovered a little bit from that and then was just like, oh, yeah, this still really sucks. So we're going to go back down. So those banks, the market is saying it's not happy with them. The heck is this?
So that chart, again, just looking at technicals, that doesn't look like a chart where people are believing that regionals are going to be okay. This is a 0 to 3 month treasury bond ETF. And the chart's just hilarious, but I'm only aware of this because I have some of this. It's SGov. So it
gaps down and then recovers because of duration rollover.
Right, exactly. So it's just funny. So when you're talking about Tether holdings or whatever, this is one way to, I guess, visualize that, because their focus is the short term, right? They're just constantly rolling stuff over. It's not the TLT situation where they're down 65%. You know what I mean?
Mm-hmm. Utoin says money market funds are real comfy. So the only difference here for people interested is a money market. You're just the money market fund itself is going to have some version of probably short-term treasury rollovers.
Right.
And you, as the person holding the money market, you might only get 4% instead of 5% or whatever. The money market fund is making that delta, and you are completely liquid as the person in the money market fund, and you're allowed to just yank it out of there at any time. So yeah, if you're just looking for total liquidity, then something like that could be perfectly appetizing for your everyday person.
Yeah, and if you got a CD or something that has a lock to it, a component where you can't exit early, sure, right? 5% for a year, 5.5% for a year, whatever it is.
Yeah,
I don't hate it.
Yeah, I recently discovered that a bank that I was using was charging me almost $100 a month for the privilege of putting money in their bank, and I'm like, no, like I'm raising absolute hell with them, and I'm not even earning yield on like savings balances, like reasonable balances, earning no yield and getting charged almost $100 a month for whatever banking privileges I was getting. It's just ridiculous. Like they should just all burn.
I agree. It's not great. Of the Elite 8 or top, what is it? What is the 7 acronym they use? Anyway, of the top 7 stocks for me, like Meta looks the best from a technical perspective. The others are kind of, Apple, Microsoft, they're all kind of in the cloud and not quite as bullish as Meta, which is weird to say, but Meta looks really good. NVIDIA looks okay. If you're paying attention to the S&P and things like that, like it's important, I think, to have a viewpoint on the top 7, because that's where the market is right now,
Yeah.
So anyway.
If you notice, oil had a massive correction after a large run, and I think that's across multiple commodities.
Yes. Again, the energy bulls last week, so this week I've seen more SPR charts than I have people talking about oil selling off, like what, 10%, whatever this is.
The SPR being the reserve, strategic petroleum reserve, and they have not filled it back up, right?
Correct. So Biden drained it to help with inflation, to help with midterms, whatever. I don't care what the reason is. I'm glad he did it. I hope he drains it to zero, and I hope people still cry about it. Okay. That's where I am.
How do you feel, Josh? How do you really feel?
I'm just saying, like, whatever. If you don't like it, vote for somebody else that will fill it up. I don't know what to say, but the oil chart has sold off a lot. I think on, again, implied demand, consumer spending. That's my read. I don't know if that's correct, but it hit the target, the TA target, so that's great. It probably continues to sell off if there's weakness in the economy in the US,
Yeah, maybe. I don't know. I think long term, there's a lot of reasons to be bullish on oil prices, not necessarily total oil utilization.
But imagine, just imagine a world where oil goes below 70, Biden fills up the SPR, and all those people are just like, what do they talk about then?
Yeah.
I don't think that's going to happen. Even if it gets to 70, I don't think he's going to actually refill it. But it's just the stuff people
The
talk
opposition never likes for a politician to win.
No,
so.
It's just funny. People crying about China's SPR and our SPR and it's over. And here we are. It's just funny. I don't know. But the reason this is good is because of inflation expectations. Inflation based on energy. We don't want that out of control. So, do we want to talk about alts at all?
Yeah. What do you like?
So,
BTC, ETH BTC, rather, still looks bad. It looked like you set a local bottom there for a minute, Josh, with your bragging about it dropping below 0.06, and it recovered immediately.
It's like TLT. Okay, it has not made a higher high in how many months?
This is not like TLT.
No, but I'm saying the trading concept is the
trend.
Same.
Yeah, the trend
until it makes a higher high. Why should we care about it? About ETH? I'm saying, why should we care? I don't know.
Yeah, no, that's fair. At the moment, BTC looks significantly better.
I'll be right there with. I'll be right there with the ETH maxis celebrating once it makes a higher high. But
there's some stuff that is actually looking pretty good against BTC.
Yeah, I don't know if Solana looks good against BTC, but I'm just looking at this. For me, alts are a leveraged trade opportunity, so I don't necessarily sit in them. But if I'm looking for like a specific setup, this is the stuff that I trade. So Solana is an example of that. This could be an inverted head and shoulders. I don't know. I saw FTX Estate. It was unlocking a bunch of Solana, as well as A16Z.
Yeah, the FTX Estate is like the new Mt. Gox.
It is. So look, I don't care if it's bullish or bearish. Again, I'm looking at the chart. It shouldn't be bullish if they're actually selling. I don't know if they're actually selling. I have no clue. I don't care. Right. Look, if this breaks out, love it. Link also looks okay, but it's ranged for how many months? 55 months, something like that.
Like 2 or 3 years.
Like,
look at that. Oh,
it looks okay. Maybe this is an Adam and Eve. Maybe it breaks above 850. I don't know. I think we could selectively see alts do well, like 1 or 2, but I don't think the sector. Yeah. I wouldn't go down the curve too much personally, but I never really have.
Was that an intentional joke of down the curve?
No, like low caps, right? I'm never.
You wouldn't buy curve. That's what you're saying.
Well, I'm not a low cap gem guy. I know you might be, but curve. I think curve's in trouble until those OTC buyers get out. Right. That's just my opinion.
I think you're one of the only people in the world that thinks I like low cap gems. Your definition of low cap gems and mine are very different. Or the rest of the world. The rest of the world considers low cap gems to be like stuff that's been on DEX tools for 48 hours.
Okay. So I guess my point with curve, until you say a headline that says so-and-so sold their bag, I just think it's an ignore, unfortunately. But
yeah. Did you see that
Pudgy
the
Penguins?
SEC got smashed? Obviously, Pudgy Penguins. The SEC got smashed again on the Ripple appeal, but it didn't really have a big impact on price this time.
I did, and I don't understand the Ripple appeal ever, so I'm the wrong person to kind of ask about that. But people in the chat talking about Aave, I've seen people bring it up a little bit. Until it breaks out, I'm not like a bull, but it's something to watch. Certainly, there's a lot of halfway decent setups.
In full disclosure, I own a pretty significant amount of Aave from a portfolio allocation perspective. It's
So
probably what I'm most bullish on. Not to say other people should buy it, but I like the chart and the product, and I'm a Dino DeFi enjoyer. So I have Aave, and I am very closely watching the consolidation thingy that you're pointing at.
it's a lot of things, it's a descending triangle, it's an inverted head and shoulders, it's an Adam and Eve, it's
a range.
It's a Rorschach test.
I kind of like the Aave BTC Aave ETH pairs, or you can point at a couple others. I think Solana's actually pretty similar. Like kind of these little Adam and Eve type setups that if they can reverse, then they're pretty comfy in that scenario.
I don't hate it as a trade. I don't think it's going to necessarily last, but as a trade, sure.
Joey says, Ledger Aave community member. I'll have you know I'm in profit, sir. Just a little bit, but I am. Yeah.
Any other alt?
I don't recommend my trades to anyone else. I'm just sharing because Josh brought it up. In fact, I actually try really hard not to bring up coins that I'm actually personally invested in if I can bring up a proxy that has a similar thing. So just FYI, it's my personal attempt. But anyway.
It's not like it's doing amazing anyway.
Right. No, it's not. But if I can talk about Chainlink instead of Aave because they're very similar setups, then I will talk about Chainlink because I don't have a personal stake in it. I don't want people to feel like I'm just trying to show my backs because I'm not. Don't buy Aave. Dump it.
Sure. The total 3 chart that I pulled up is kind of emblematic of a lot of alts. They're still in the range. They still could break down. They could break up. They could maybe reverse, but it's
total market cap minus the stable coins.
Right. Minus stable coins, minus wrapped Bitcoin. So I think all these alt moves have to be pre-Bitcoin ETF.
Yeah, it just looks like a big bag of nothing to me on that chart.
Yeah, but you see Aave on this, you see Uniswap, you see
it's all in there.
It all looks the same, So
and this is the argument to say don't buy the index of altcoins. If you're going to make a bet, it makes more sense at least to make a more concentrated bet where you're either really right or really wrong. But if you just own the index, you're going to look like that. You're going to look like a big bag of mush.
Yes, I think selectively, tactically playing setups makes sense. I think spreading your seed far and wide is silly right now. But yeah, I don't know. Is there any other alt? Maker's done really well, but
yeah, I keep forgetting to put Maker in my watch list, and therefore I don't look at it and don't make money when it makes money. MKR. Yeah, it looks really good.
I think it's probably too late as far as trading this thing, but surprisingly, it's done really well.
That June 2023 time frame is like what you hope a link or something is now, right? Like before it breaks out of that range,
right? Pre-breakout. But this whole conversation has been very different than the previous 4 weeks, 6 weeks, 8 weeks that we've discussed.
Oh yeah, we're talking about potential upside.
So it is different. It is different. We got SBF in a courtroom. I mean,
oh yeah,
is anything better than that?
There's lots of news. SBF in court, Suzu in cuffs, Tabasco on his boat still. How's that guy? How's that guy free?
That's what a lot of people are wondering. I don't know.
They said something in the case. I've really tried hard not to pay too much attention to the SBF case. But they said there's 2 protected witnesses or for the case. And one of them was I don't know, Gary Wang's roommate or something like that. It was some employee who I didn't know who they were. And they had immunity in the testimony. But there's a second one, but I don't think they know the identity of the second one yet. And if that is Tabasco, then unreal.
I mean, it's got to be, right? Who else would it be?
Caroline? I don't know. Did they press charges against Caroline yet?
I thought they did.
I don't know. I don't know. He's just like he's not been arrested. He's not. His location is unknown. He's on the witness list, but he's not like being talked about. I don't know.
It is very odd. The last thing I'll say on BTC, there are a bunch of high time frame EMAs here: the 20 week, the 200 week, the 200 day. The cloud is here at 28, so it's a big level. If we get back above 28 on the daily, I can feel much better about that weekly edge to edge move. You can probably feel better about your alt trades if you're in alt positions.
It would feel good for the Dixie to dump.
And ETH, I don't know what's going on with Lido and ETH. It's just a mess.
There's some kind of drama about ETH staking.
Some kind of drama about not being decentralized. Yeah, I don't know.
Listen, I'm not trying to speak one way or the other. Oof. You want to see a chart that's bad? Look at this. I'm just going through a watch list. Look at Phantom. Not all charts are made the same. This looks atrocious. This is an example of, in my mind, do not buy. Like something that's just been pounding that same floor over and over again and just can't bounce off of it.
That's a low cap gem to me right there.
But what's the market cap of Phantom?
I'm not saying I'm bullish. That chart looks horrible, but Matic's kind of the same. Matic is at some pretty important levels on the BTC chart.
I don't know how market caps work on TradingView, but let's just assume that the Phantom market cap is significant. Gecko.
It's up there. As Ginga in the chat is talking about BNB, yeah. When is that going to break down? Do you know?
BNB looks a lot like this Phantom chart. The fully diluted valuation of Phantom is $618 million.
Couldn't tell you what it is. I know the coin, obviously.
It's a layer thing, layer one.
It's a layer thing. Okay.
BNB. Yeah, it looks basically the same as BNB. Look at BNB. That looks atrocious. I legitimately think BNB could retrace the majority of this elevator up.
100%. I want to see something happen so that we know, like,
yeah. On Weekly Open, Don Alt talked about maybe there's some kind of level inside of that thing that could stop. I always think that's a fun idea, and it is around 130. So I feel like BNB is going to elevator down into this zone, 130, 140 maybe. It'll stop, and then you reassess from there as to whether it continues its march down. But this looks like it just really, really, really wants to go down.
Well, here's something the alts need to fade is if Binance goes down for legal reasons.
Doesn't have to go down even. It just has to get scrutiny, like greater scrutiny, action, not just scrutiny, action.
Sure. But I'm not bearish on, I'm not bullish on a resolution where CZ just walks away, I think something's going to happen there. And the question is, how does that affect the alt market? So definitely have to be careful on that side of things.
I'm not like overly bullish any of these like other layer coins. I just feel like there's a lot of them. So you might see some do well, but how are you going to pick it? It's going to be a challenge. Avalanche is one that has a FriendTech clone called Stars Arena, and that is directly impacting its chart over the past couple weeks. Also, the Suzu and Cuffs thing kind of makes this interesting. Like, Suzu can't sell if he's in jail, can he?
Or was he long AVEX?
Yeah, they were highly involved in it. It's kind of like Three Arrows Capital and Avalanche is similar to like FTX and Solana in terms of that primary backer relationship type of thing. But it's had a positive impact on the coin over the past few days because a lot of people are aping that, whether it's real or not, I don't know. But yeah, maybe you can catch a move on some of these in that way. But overall, I think you put the like average layer 2 or alt layer 1, and I'm not sure that I would like go pick any of them versus making a more strategic bet. And if I was making a more strategic bet, it'd probably be on like Solana in terms of alt layer 1, or like a very specific alt layer 2, like if I was really bullish on Arbitrum or something. But I don't know if I am bullish on Arbitrum. I'm just naming one.
Yeah, I don't know how the value accrual is going to work out long term on any of that stuff.
Exactly.
And I think these layer 2 coins are a problem for ETH spot because people don't need to touch ETH, right? They could just stay in that ecosystem.
I don't know. Base is doing very well.
Something else real quick to mention is GBTC and ETH still have a pretty decently sized discount. It's shrinking. But my question I had is, if you are somebody who knows something about the industry and the market, I don't have it pulled up, but if you're trying to get crypto exposure and you know that those products exist,
they could be attractive.
Wouldn't you purchase those instead of spot? So my question is, what's going to happen to spot once that discount actually closes? If it does, will we see a better move on spot? Because that's going to be a more attractive option. I don't know. Just something to think about. S&P having a party today.
Yeah.
That's good. Look, it's good we didn't break down on Cryptoland, even though we should have, arguably. And we just got to get above 28 here on Bitcoin, and we're laughing.
Yeah, send it. Multi-month correction in the Dixie would be great. And it's not impossible.
No, I like 104, and then we'll talk. But
yeah, but like you could spend 6 months going to like 102, 103. You don't have to do this stuff immediately. Usually these markets move quite slow, and that allows other markets to like get better liquidity. When it's just turbo mooning like that, it takes liquidity out of everything else to the downside. And so you can,
everybody's panicking because of the yield situation. You know,
right.
you have to sell other stuff. It's like 2020, it's like 08. Like
that's what I'm saying though. Once you establish some balance there, and you just say like, hey, the rate of change is going to be 0. We're not going to rate like the market starts pricing in. We're just not going to do anything for like a year. You can better liquidity across the board. You'll still have pain in some sectors that can't function in a higher yield environment, but that doesn't mean like people can get off the sidelines because they know what to expect for a while. And I think that's important for the whole soft landing concept. I mean, I'm not Jerome Powell, but if I were, I'd be in wait and see mode, and I'd make that pretty clear to the market. You're not making a easing stance. You're just saying, hey, we're gonna chill for a while right up here in this historical median of 6% rates. You know,
what you mean is a hawkish pause.
A hawkish pause. I'm in for the hawkish pause.
So yeah, I agree. Higher for longer. Things look good. I don't know. The data is all over the place. I don't know what else to say.
Go Braves.
Go for it.
Thanks for joining us, everybody. We will see you next week. Next Friday? That series will be over, right?
Will it? Today's the first day. No, tomorrow, right? 10-7 is the first game. Saturday.
First game is Saturday, and then it's a 5-game series. So maybe the final game will be going on next time we talk.
Maybe.
All right. We'll see. We'll settle the score then. Thanks for being here. I'll catch everybody later. Have a great weekend. Monuments crumble. Follow Josh at Carpe Noctem on YouTube. He's posted lots and lots of good videos and content. Just run dry in a house of cards. I feel the breeze wound so tight I can barely breathe. Oh, the change